Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea, don't get up at 3 a.m. I got up at 3 a.m. today because Europe was blowing up. Overnight with a 7 a.m. Tokyo, 7 p.m. our time. Opening, Japan was fragile. Great Bloomberg story today out of our Tokyo News Bureau on the real fiscal challenges of 10 and 40-year paper in Japan. Rolled on over with the Trump tariffs and Liberation 2 and the zeitgeist of the weekend to a really difficult European bond market. Thanks to our team for good coverage of that. Starting out right at 7 o'clock this morning, we went on through with a really pretty fragile, soggy tape, particularly with earnings tomorrow from J.P. Morgan. And then it got better. Here's George Bory. He's with Allspring. He's wonderful on fixed income. And he agrees with me. Watch the 30-year bond.
30-year yields could easily approach 5.5%. We think we could get there. Now, how much?
What does that do to Paul Sweeney?
Well, that probably makes him a little anxious because he owns a lot of 30-year munis. Yep. So those yield up, price down issues does start to weigh on things. But the political considerations are important. And I think the linchpin is not so much the level at which Treasury yields get to, but what is the feed through to stocks. So at 5.25, does the stock market get anxious and we see a 10, 15% price adjustment like we saw back in April? Right now, everyone's sort of cool, calm, and collective with respect to tariffs and deficit spending and sort of all the things that have been kind of put into place and are being put into place. But that tipping point, we think, is around 5.25. But certainly if we were to get up to 5.5%, that would sort of suggest we've gone a little too far, too fast, and markets need to adjust.
George Bory, Allspring there. Two observations, if I could. The first one is everybody's gaming out 5%. I did a standard deviation study today, and technically the word I use is soup. I can't give you a view on the 30-year bond above 5%. The technicals are just a mess right now. With that said, Michael Hartnett of Bank of America out, I think, with a 5.1 is an important level. Right now, 4.98. If the yield goes out to 5.10, Hartnett sits up straight and watches. George Bory's out even farther than that. I don't know. Ken Rogoff, in my book of the summer, Our Dollar, Your Problem, really models out humility is in order here as yields grind higher. So many people have been wrong. And when I brought up the 30-year French bond today, it's amazing how fast the yield space of France has changed. I don't think anybody understands, coming off of low rates, negative rates, how quickly they're out to, I believe it's a 4.25%, something like that. We talked to Ben Laidler of Bradesco. He's a bull, and for the first time in ages, Ben Laidler off tariff news. A bit cautious. Let's listen.
I would certainly be holding a little bit of cash, ready to buy that dip, which I think is coming. And I would certainly be looking at the rest of the world. I mean, I think the rotation narrative remains in place. I think this is worse news for the United States than it is for the rest of the world economically. And I think the rest of the world has buffers that the US doesn't have. The US still has this double premium of an expensive currency and expensive equity markets, and the rest of the world doesn't. I wouldn't want to bet too much against corporate America. I'd be looking for opportunities in any sell-off in tech and healthcare, but I do think we've taken the taco narrative too much at face value, right here. I think there are, the Trump puts are still out there. They're just further away. I mean, I think there's maybe a new one you alluded to earlier of the sort of American stomach. What's going to happen when your coffee, your orange juice, your sugar, your beef is all 50% more expensive? Time will tell, and we will find out.
Ben Laidler of Bradesco there. Really quite a changed tone for him, a real bit of caution there, given the tariffs. To summarize all the tariff chit-chat, and I'm being, don't quote me on this, but the basic idea is we were at 3% blended tariff. We ballooned out, we came back. Right now, with the recent ballooned out of Friday, Ernie Tedeschi and the Budget Lab at Yale, they're at 18%-ish. 1934 level of tariffs, and there's this wide perception that that's going to come down. We will see. On your podcast, on Spotify, on Apple Music, on YouTube, podcasts. This is single best idea.